We made it to week 3. Thanks to all of you that participated in our first 2 sessions. Today we have something really, really special. My guest, I think, needs no introduction, but in case you don't know, we have Paul Schickler on board today, former President and CEO of DuPont Pioneer. Paul, welcome to the root of it.
Good to be here, Han. Look forward to it.
So, Paul, this session today is really special for me because not only the third part, but the overall series was actually the inspiration came from our first meeting back in San Diego in 2019.
Right.
And I remember we were downtown. We were wearing Hawaiian shirts at the Finisterre Summit. And it was the first time, we had actually met, I think, despite having kind of known of you for years, never quite made it through your doors. So I was a little bit starstruck, a little bit in awe. And it was one of those conversations that I just found absolutely inspirational. I don't think as a startup CEO, I have ever had that kind of candid and transparent conversation about how large companies and corporates think. And for you to have shared all that experience during your tenure as president of DuPont Pioneer, it was so eye-changing, so mind-opening, because I started rethinking about everything I knew about Pioneer in the 7 years that we've been running ZeaKal, and try to put into the context then of the strategies and the initiatives that you were working on. And I thought, wouldn't it be amazing if all startup CEOs kind of had that transparency? And again, that's really what led to the inspiration. And I'm hoping that today you and I can kind of give our industry a little bit more insight into how we can harmonize and create a better ag innovation ecosystem, if you will.
Right. And, so the event that Han is speaking of is the Finisterre annual conference. And that was my first Finisterre conference. I had only joined the Finisterre Advisory Council maybe 6 or 7 months prior to the conference in San Diego. And so it was my first opportunity to join. And of course, I knew, at a high level, a lot of the portfolio companies of Finisterre. But I sort of had my eye on ZeaKal because of the technology that was behind it, the photosynthesis and, the opportunity to change the composition of grain. So while Han might have been, looking forward to meeting me, I also had my eye on you.
Flattered, very flattered. Thank you, Paul. Before we start with the session today, I think I want to rewind a little bit and maybe set some context for two very, I'll call them diametrically opposing or contradictory theses of our industry and the innovation ecosystem. So everyone who knows me kind of knows that I grew up under the tutelage and mentorship of Jerry Calder, former CEO of Mycogen and our late chairman. And when I actually started on the venture side. And Jerry kind of set this context and he said, ag is just like any other area of life science or venture-backed industries. If you build good companies with good value, eventually large companies will want to acquire you, make you part of their product development portfolio. Startups have just so much more nimbleness to take on innovation. And startups have kind of become the pipeline, if you will, that feed into large companies. And that's an ecosystem that we've seen across Boston, San Francisco, San Diego, where universities graduate into startups then graduate into large companies. And we kind of have, the big fish eating the small fish. And there's that harmonization where one group does what it does best and then kind of moves on. And then around that same time when I started, I remember this at a conference. I think it was Adam Anders. He was partner at Terra Capital. He made a very astute observation. He said, despite the fact that ag and ag innovation has received a lot of investment, it actually is not a true asset class. And his argument was, we don't have exits. We don't have significant repeatable exits that really demonstrate that the innovation being built is truly the ecosystem that we had envisioned. And I started wondering, the so-called industry that Jerry talked about and, kind of his experience, was it kind of mythical, almost like a Camelot Era, if you will? Did that really exist where large companies were looking externally for innovation from startups? So Paul, having been, president and CEO of DuPont Pioneer, can you kind of provide a little bit of context and history to the evolution of these ecosystems if this Camelot Era truly existed?
Yeah. And, I think that is a good perspective or chronology to look at. And, if I think about it, there's maybe three components. First is, in Han's words, sort of the Camelot Era. And then the second is what brought that to an abrupt halt.
Mm-hmm.
And then third, where are we going forward from today? And so maybe the first thing to do is go back into the 1990s and
Mm-hmm.
think of that era. And that era, all the majors were exploring and looking into biotechnology opportunities. We came upon a couple of great opportunities, insect control and herbicide tolerant. And, in the scheme of things, those were pretty easy, pretty straightforward. We, the majors, had germplasm. We had strong research organizations, and we could take those technology traits and put them into our germplasm pretty effectively. And we did that. And then we did our normal testing. We did our introduction and ramp up. And it was pretty, remarkable
Right.
that these couple of traits, insect control and herbicide tolerance, like I just described, were relatively easy to accomplish. They were introduced to the marketplace with a lot of positive reception on the part of farmers because they solved problems, they made operations easier, and perhaps even more important, the value was clearly evident.
Mm-hmm.
So you went through this whole period of, about 10 years from development to introduction to ramp up to adoption, 10 years. And basically you penetrated those traits 90% in corn, 95% in soybeans. That is pretty remarkable. And then what else did we do? Well, we had in each of those cases, with herbicide tolerance and insect control, we had different versions, different, you might say, versions that came along that built upon the previous versions, but made them better or complementary. And then what else did we do? We stacked them. So there was really, arguably no new innovation.
Right.
We just kept tweaking what was already working and accepted and combining it with other stacking opportunities. And, that continued for 10, 15 years. Now, I think another important consideration is the competition was immense among the majors. But it's interesting, the competition, yes, it was in the marketplace. I mean, we were fighting for acres among ourselves. But also look back at the competition. We were fighting in the media for space. We were fighting in the investment community for investment dollars. We were fighting in the courtroom for freedom to operate. And we were fighting to, get others to join our bandwagon so that our partnerships would be greater than somebody else's partnership. So that was an interesting, yes, we were fighting in the marketplace, but we had all these other competitive activities going on to try and, you might say, shore up our foundation.
Right.
And so then, you get through the latter part of the first decade of the 2000s, and we're all enjoying that value that we delivered. But at the same time, the competition, sort of all the way from in the limelight to getting investment dollars from the stock market. But then what's happening? We're looking to the future, and our pipelines are dry. We don't have the next generation of insect control for those insects that were showing resistance to our technology. We didn't have the next chemistry to go after the weeds that were, showing resistance to the current chemistries on the market. So our pipelines were bare, and we were looking out to the future of what's next. At the same time, the ag economy was going south. We had gone through a period of, 10 years of basically building surplus. We
Mhm.
were enjoying the demand of biofuels and China and all the rest of Southern Asia, enjoying all that. And then all of a sudden, all that stuff peaked and plateaued, and in some cases even declined.
Mhm.
And then surplus is built, commodity prices plummeted, and now since 2013, 7 years, we've been in that situation where we've got surplus, and we keep basically building that surplus of corn and soybeans ever since. And then
And
on
that
top,
really drove the wave of consolidation.
and that's the next thing that happened.
Yeah.
Was
Eventually, everything was frozen because of that. Yep.
consolidation occurred, and then what happens? If you look at those majors, and so I'm going to go briefly back to the Camelot era again. We were spending, all of us, we were spending 12% of revenue on research at that time, and still delivering value to the investment community.
Mhm.
Now, after consolidation and after a decline in the ag economy, all those same companies spending a lot of money, but it's about 9% of revenue. So that's
Okay.
a material change. And the result is, what do those pipelines or research portfolios look like across all the majors? They're pretty much the same. Everybody's focusing on breeding.
Yep.
Everybody's focusing upon CRISPR.
Mhm.
Everybody's focusing upon data analytics. Everybody's looking at next generation BT, next generation herbicide tolerance,
Mhm.
and for the most part, corn and soy, and maybe some other crops.
Mhm.
That's the portfolio of all the other companies.
Mhm.
So they are stuck, which is part of the reason why it's gone from 12% of revenue on research
Mhm.
now down to 9%, because now the pressure is back on the companies. It's not the Camelot era where everything is wonderful and we're
Mhm.
capturing all this value. Instead, we're fighting for financial success or financial acceptance with the investment community.
Yep.
And that's resulted in a focused and narrow pipeline. Now,
Well, let me ask you
that-
a question. Then. When you mentioned that everything is now coming kind of to a new point where these large companies have cut research, more focused than ever, and we're still kind of in the era of low commodity prices, although that might start changing with a lot of the climatic volatility that we're seeing and how that's affected growing across the world. But I saw a shift a few years ago, and I think it was maybe driven a little bit by the consolidation or post-consolidation, I'll say. Companies started to say that we are now out of it. We have now done the mergers, the restructurings, and we are now focused. You're saying that focus is there, that size is much smaller, but we've also heard companies talk about the importance of external innovation. Every company, as you said, within those buckets has now also emphasized external innovation. With the cuts, though, do you think that we're going to see a new renaissance of partnerships and hunger for external innovation because there's focus? Or do you feel like that's really lip service because of very real financial constraints?
I retired in 2017.
Mhm.
When I retired in 2017, my belief was that we would have a new renaissance because the majors, including Pioneer or now Corteva,
Mhm.
were so focused on what I just described as that pipeline, focused and somewhat of a narrow focus at that.
Mhm.
That we were then going to be aggressive in looking at innovation from the outside that was outside of our research portfolio. Because if we missed something, it would be to a competitive disadvantage. Or if we missed something, we would miss the next great innovation that might hit ag tech. So that was my belief,
Mhm.
that the majors, even the mid-level companies, as well as the regionals, would be very, very active in
Mhm.
exploring technologies through ag tech startups,
Mhm.
because we're all looking for that niche to get after the next innovation and also, block the competitor from doing so. Now, 3 years later, I'm not necessarily seeing that happen. I don't see concrete evidence of anybody, again, the majors, the mids, or the regionals really stepping out, and they've got their existing focused and invested in portfolio, but stepping out aggressively to create a new space outside of that focused portfolio. Now, will it happen? I still think it will. I still think there's an opportunity for, again, majors, mids, or regionals for a leader to step out there and say, I'm going to go after this space and put together a set of technologies to lead and ultimately own this new opportunity that's outside of my core focus. We'll see if that happens. Alternatively, there's no question that the channel or the consumers ultimately will force that to happen, because we're already seeing consumer trends change, channel demands change, that at some point the pressure, again, back to the majors or mids, will force them to go after a set of technologies that are outside of their research portfolio. I think that's going to happen. Either someone's going to step out and lead that to happen, or they'll be pushed by consumer or channel trends. If they don't, I think it's going to be, sort of a continuing spiral of where we are now. Okay, if it's 9% research as a percent of sales, well, soon it's going to be 8%. Then it's going to be 7%. It'll keep being ratcheted down because we're all competing financially for the investment dollars when the innovation for the future isn't making up the difference.
Well, I mean, I agree with you, Paul. It does feel like it's a shrinking iceberg for a lot of us. And as you mentioned, if the pipelines of today and the companies that have the most market share are just another permutation, a shuffling of the deck chairs on the Titanic, if you will, of what's already been done, then there really is no new growth, or there's no new opportunities that necessarily tries to lift the income of agriculture. So if we're trying to, assuming the pressure is there, we are now at, a few ticks away from the doomsday clock of saying we have to change. It's about the survival of our industry. The pressures there, our customers, our consumers are demanding that change. Today, if we were trying to build a better agtech ecosystem and a better way to harmonize innovation that either reduces the cost of innovation, speeds it up, increases its robustness, builds more entrepreneurs, how will we do that? And I keep trying to think about lessons that we can learn from other industries. And in agriculture, and when I think back, we were always compared to pharmaceuticals. Pharma went through a period of consolidation, just like ag. But when I look at pharma or even med devices, the thesis is always, as a large company, we just don't have the incentives, the nimbleness to do research. We're not good at that. We're not set up to do that. And most of the large life science, pharma, med devices company have very little internal research. They have great product development, but very little research. And then there's this active, I would say, functions, a function within the company to go out there and actively acquire new assets. And a lot of my investors also invest in life science. And when they tell me about these sectors and I look at ag, it's night and day. And I love this story. These companies go out there, M&A managers from pharma or from med, they work with venture capitalists that they know well and want to see what's in that portfolio. And typically what happens is if they see a technology they like that fits in the portfolio, they will want to give you a term sheet. The valuation might be something that you're not excited over, but it's one that you'd be a little bit afraid to turn down. And furthermore, they're acquiring technologies at all stages of the life cycle, early stage research, ones that have gotten through so-called phase 1, phase 2, and even some mature companies. And they're finding ways to price for all those assets depending on where they want that mix to be. I have not seen that in ag. I have not seen this, I would say, thesis or infrastructure or incentive, if you will, for big companies to behave like that. In fact, one of the feedback that I've often gotten from large companies when we get down the path of negotiations or discussions is, well, actually what you're asking for makes a lot of sense, but we are not set up to do that. We don't have a champion to do that. We don't have an infrastructure to do that. Why does that difference exist, Paul? We're all in life sciences, but can ag be more like a pharma model? Or are there inherent challenges or barriers that prevent us from doing that?
If you remember back, I mean, I can think back to, even the late 80s or the 90s, and ag did, as we went into technology, particularly biotechnology, we described ourselves as, hey, we're like the pharmaceutical industry. Well, that's a good, nice, easy, and maybe flattering description to make, but I'm not sure how true it is. And pharma better than I, but it is there's less steps in pharma. They develop and introduce a product, and in many cases, their route to market is directly to the consumer, or maybe there's another step in there. So it's relatively straightforward. If you think of ag, we are developing product. We're developing germplasm to go with technology. We have to then sell that combination to a farmer. If we sell that technology to a farmer and the farmer produces a crop, the channel needs to make certain adjustments to accept that outcome from the farmer. End use needs to change because now they need to put a new value on the product they're getting from the channel. We've got to strive. We're selling to the farmer, but the consumer, the ultimate consumer that's buying something off the shelf, also wants to benefit. So the point of all that is all the way from development to farmer to channel to a processor to the end user, the consumer. There's a lot of steps. A lot of people have to change their behavior. A lot of people have to get what they want and get value for it. And it seems to me like that's a little different than pharma. So maybe we talked ourselves into a situation to think that we're the same or simple, but it seems to me like there's some complexity here that makes us different. Now, one of the legacy, again, back to the Camelot era when things were wonderful as we introduced biotechnology products to the market. One of the outcomes of that was, even during that introduction of new technologies, we took the technologies, we put it in our germplasm, and we marketed. That was pretty operational. There wasn't a lot of innovation in that, in our shop. We had to be very good at it. But for the most part, that was very operational, and we executed well, and as a result, we were very successful. But there wasn't a lot of innovation. And I think even though then we went through that period of the 1990s and 2000s, it still left us, after all that period, still with a sense of, if it's not invented here, I'm not sure how supportive I am going to be of it, even though we introduced all that technology. But it was a lot of execution as compared to innovation. So what does that mean? How do we, if we're not the same as pharma, how do we make ourselves accepting and even aggressive in the pursuit of innovation?
Right.
I think it comes down to a couple of things. First is a lot of these solutions or innovations are a set of discrete things that need to be combined together. They're not just one innovation that we can pull off the shelf, put it in our company, and we are now, for the future on a new growth trend line. I just don't see that. Instead, these technologies might require 2 or 3 other components to be put together with it in order to make, you might say, the system work. Now, let's see, session 2 of the root of it all was Mary from Canopy Rivers. And I think she made the point that, as Canopy was entering and trying to begin a new industry, cannabis, that's what they found. They needed partners. They needed to look at things as a systematic approach, putting together a bundle of activities or technologies or attributes in order to make something work. So I think that's what we need in ag tech is the ability by someone. Could be a major, it could be a set of VCs, it could be a set of startups, to put together the discrete components into a bundle that make the wholeness of a technology work when it might be acquired by a major. That's one thing. So my point of all that is we've got to look at partnerships and systems as compared to individual discrete technology answers. And then the second is, which goes back to the point I was making about not invented here syndrome. We need to bring new people into big ag and big food because we come from that execution or operational mindset. We need the innovation mindset inside of the big companies. Mm-hmm. And the only way we're going to do that is, go out and search for it, either through, the land grant institutions that are focused on ag research, mm-hmm. Acquiring startup companies, building relationships with organizations that can attract that innovation talent into the organization and begin to change that, if not invented here, mindset.
Well, Paul, I think you just laid out 3 or 4 strategies that everyone listening, should be considering and integrating. Let me see if I can tease them apart a little bit, because I think each of these are worth discussing. The first one is the fundamental difference with ag is our supply chain, which again, this goes back to the first part of the series when we were actually talking about the physical infrastructure and the business models and how it worked. And Alan was just saying that because the supply chain, as you said, is not only long and fragmented, but it can't be antagonistic, where different players along the chain aren't partners, but they're actually competitors. Maybe the first question is, well, how do we harmonize or even truncate the ag supply chain to make it more conducive for innovation? In the first part, we talked about the incentives, the structures, the legacy, that was there. But as innovators, how do we shape that? And maybe a follow-on to that would be, does that come from startups? Does that come from large companies? I know the best answer is probably both, but in my head, I've been dealing with this now for the past few months because as a startup, our resources are limited. Our investors are always telling us to focus. You just mentioned aggregation, but focus is the key. We have to do what we're competitive in. And the idea was always that these other groups have already built this. Why reinvent the wheel? But if what we're saying is that the system is broken, does the nimbleness of the startup allow it? Or does that really fall on the incumbents? Because we're now consolidated. There's only a few large companies across each part of the value chain. I would imagine that this could be an easy conversation between a very small group of parties to say, we should all work together or else we're not going to survive. When I walk into a room as ZeaKal versus someone walking into the room as a Bayer or Corteva, ADM, it's a different level of heft and resources and scale. When I talk about 100,000 acres, that means the world to me. That's a rounding error for the large companies. But it's very hard for them to change direction. The ship goes where it wants at times. So where does this impetus needs to come from? Where does the catalyst needs to come from? Is it the speed or the weight of a company?
This is perhaps the greatest barrier that we need to overcome. Because again, going back to Alan's comments, we built, over 80 to 100 years, a tremendously efficient agriculture and food system that produces a mass amount of stuff, does it very cheaply, safely, it's uniform, so it can be shipped all over the place. Mm-hmm. To break that apart into something different from that after it has been built over the last 100 years, that's our biggest barrier. So I'm going back to what I already said at the very beginning. It's going to take some leader to step out and say, I'm going to do this, because as you are saying, it is a complex channel, and it's going to require, the whole flow of things and all the parties that are engaged in that flow to agree to change. But when you think of how that's been built to what now is in front of us, we've got demands for, I want functionality, I want sustainability, I want nutrition, I want traceability, I want stuff to be produced and consumed locally. I want clean label. I mean, the list goes on, and all those things that consumers and end users and even the channel are demanding are all contrary to what this system has been built upon for the last 100 years. So to change that, like I said, I think a leader needs to step out and take it upon themselves as a way to really not only reinvent the system to capture this value, but also to differentiate themselves from the others and provide a platform for growth in the future as compared to a race to the bottom that we're sort of currently in with all the financial dynamics that we have. Or, like I said earlier, ultimately the channel and consumers will force the system to change. Or perhaps there's another player that comes in and does it for us. Like I said, a group of startups to put together, okay, here's our view of the future. We put together our discrete components into a whole. We've solved the problem, and then we prove it. And with that proof, maybe others will follow. But this is changing the direction of a aircraft carrier in the ocean. It's a big one. But at the same time, I've been through, we think of the big companies as not being nimble, as being archaic and these monolithic structures that are just frozen. And, even the example that I gave here of penetrating biotechnology with 90% in corn and 95% in soy, that required execution, yes, but nimbleness. You look at a seed company's ability to deal with the SKUs that they have, the number of hybrids and varieties, the number of package sizes that they have, the number of traits that they have, the number of seed treatments that they have, and then to get that out into the distribution system to a farmer when the farmer needs it at a certain time, and then the weather changes and they've got to change it. Those hundreds of thousands of SKUs, that requires nimbleness. So it can be done, and maybe that's even an attribute of the big companies, is that when they throw their heft behind something, they can be nimble.
I agree, Paul. And again, in this Camelot Era model, I had this really ideal image. I remember when Bayer acquired Monsanto, and Werner Baumann was on, I forgot, it was CNBC, and he was interviewed, and he goes, "Why are you buying Monsanto?" And he kept saying, "Well, the WACC is good, the WACC is good." He meant the weighted average cost of capital. And as a finance person by background, that really spoke to me because it was logical. It was saying that small companies are good at certain things and large companies are good at certain things, where there's a very different cost of capital for what we have to do. As you just mentioned, an individual company taking on hundreds of thousands of SKUs, reacting globally in real time to all those factors. As a startup, is that something really worth replicating? Is that something that we really want to focus our skill set on and have to rebuild that? And what you're saying is startups have to come together and aggregate. And I agree with you that solutions are more valuable than products. We actually have to solve the problem. But as a startup, we really feel like that there's a space that an entrepreneur, given his personality, why he's in a small company rather than a large company, and what he's doing with those dollars is just better. If you were, again, now that you're retired, you're working with startups, for your startups that you're working with, and for any other startup listening right now, what would you say to them? What are the swim lanes? What are the best uses and milestones that they should be focused on? So yes, there might be a new startup that becomes a big five in the future, but for those right now that are at their pre-seed, their Series A, and who are hoping for that partnership deal or hoping that they can create something that's valuable to a larger player, or if their investors are asking them, well, why don't you have an exit? What would you say to them as, this is what makes you attractive? These are the things that you're doing that are just so much better than what we could do, and focus on that sharp end of the stick. What are those lessons or recommendations?
Right. Well, again, when you talk of an early stage startup, the focus must be there. The focus on their technology, on their expertise must be there. Instead of going off after every tangent upon which this technology could be applied to, that focus is important. Mm-hmm. So when I say that focus needs to be there, it is on your expertise. Mm-hmm. So in this case, ZeaKal's expertise needs to be laserly focused on pharmacy and not get off into other things. Mm-hmm. But then, while you do that, while a CEO has that laser focus on their technology to make it better and to prove it, they also need to then be thinking of, okay, how does my technology fit, or how does my technology is dependent upon others, and begin to envision how it fits into a business model. Because ultimately, back to what you just said, we need to be selling solutions, not products. And so you're not simply going to be selling photo seed. Mm-hmm. You need to be selling photo seed as a component of an overall solution. So while your focus needs to be narrow, your vision needs to be creating that system. And then finally, it is building relationships or networking, whatever you want to talk about. Ag is a huge industry. When you look at the dollars associated with it. But I think we would all agree it's a pretty small community.
Very.
Huge industry, but a small community. We all know each other.
Right.
So a CEO of a startup needs to be building those relationships in that huge industry that has a small community of players. Mm-hmm. So anyway, that would be my guidance to a startup is laser focus on your technology so that you get it right. Mm-hmm. A broad vision so that you put your technology together with the other dependent ones. Mm-hmm. And then relentlessly building your network or relationship within the industry so that you can open those doors as exit alternatives are considered.
Let me ask you a question on that exit alternative and building the relationships. So this whole conversation, as we kind of say, well, was the original thesis correct? Or even if it was correct back then, is it correct today? Do you think as an industry, when we think about the players, who's investing in technologies, the entrepreneurs that are coming in and the large companies, despite our challenges and what's unique to our industry, is it right for us to continue to think about large companies as liquidity makers? In other words, is that a responsibility and role? Not that large companies have to play that role, but is that a role that they should play because it benefits the ecosystem? I'll use this as an example. So San Diego, the entire biotech community was really built around maybe one startup, Hybridtech. And the founders of that ended up starting their own funds. They became serial entrepreneurs. Success begot success. And in ag, that hasn't happened. The timelines are extremely long. Like I said, exits are sporadic. And if you're saying, Paul, that large companies are becoming more and more focused, there's less and less external innovation. At some point, there might be no internal innovation, and they have to look outwards. If our industry doesn't survive, if the startup community starts disappearing, the capital starts drying up, the universities no longer fund the type of research that leads to those breakthrough sciences, what happens to the ecosystem? What happens to that top? For self-interest purposes, should large companies, as part of their strategy, think of themselves as liquidity makers? And I often use this example, which is I could go to a large company today and say, well, I want X dollars for my innovation. And they can say, well, it's early, it's too expensive, you haven't proven this, you haven't done that. And a lot of times my argument is always, well, to get to this point of where we are, you would have already spent 2x that amount. So in some ways, we're giving you a better shot on goal. And my poker analogy, I want to sell you pocket kings every time. So even if the cards come out, bad on the flop, you're still ahead of the game. I want to see you look at 10 innovations, a portfolio approach, and if 2 of them work out, you filled your pipeline. But you're fostering innovation, you're taking it on earlier, and you're supporting this ecosystem for everyone's benefit. Selfishly, for the startups, they get their liquidity, they prove out the technology, but ultimately it's about mutual survival. You're enabling those entrepreneurs to now become serial entrepreneurs. You're allowing them to mentor the next generation. You're allowing them to create case studies for what's being built. For the large companies, you're creating entire portfolios where it's much cheaper to diversify that risk. So should this be something that they think about? Should this be part of their strategy? Because I don't think any large company right now necessarily says, I'm putting X dollars to M&A or external innovation. It just sort of happens if it happens. And having gone now down the route with several large companies, having gone extensively in these conversations, when you kind of get to the end of these partnerships, whether it's a partnership, whether it's an acquisition discussion, it kind of feels like you're almost either religious or superstitious because you're waiting for the moon to line up, a 4-leaf clover, a rabbit's foot. You want everything to kind of happen, and there's just no kind of, yes, you built a good company, it's this valuation, we like it, let's find a way to work together. So Paul, what are your thoughts on that? As someone that was sat in that seat, buck stopped with you.
Right. Well, first to your point, you're exactly right. The companies do not have a bucket of money sitting aside just waiting to be dumped on M&A activities or investment activities. Instead, if we make a decision to invest or acquire, it is going to result in stopping something else that is less value. So there's always a trade-off. There's not just a bucket of money that's parked waiting to be used. I don't think anybody has that luxury. So what do? And this comes back to what I said very, very early. I think we are at a point of change because consumer and channel demands are changing. And you're clearly seeing the CEOs respond to those consumer trend changes. Everybody's coming out and saying, that climate change is an issue that they want to be focused upon. They have a sustainability set of objectives. More recently, racial justice. Everyone's been fighting for gender equity. The U.S. Chamber of Commerce rewrote their fiscal responsibility to include social responsibility. So, consumer trends are moving. Companies or CEOs are responding by laying out these principles around these set of issues that I just mentioned. The thing is, nothing's going to change until investment dollars go against these components that I just mentioned. And that's what I'm waiting to see is who's going to step out. It's fine to have a platform for racial justice, gender equity, climate change, sustainability, and all. But until investment dollars go against them, their words and not a lot of the necessary actions. So let me give you an example, and I think if I was a CEO today, I might jump at this because it's imminent, and that is climate change. You've got Senator Stabenow and Senator Braun. Stabenow's Michigan and Braun is Indiana, and Stabenow's Democratic. Braun is Republican, and they're promoting, an act called, climate change control or something like that. But basically, it is an effort to begin to establish carbon credit markets in agriculture, so that if growers follow a certain set of practices, they can participate in that market. Mm-hmm. It's got bipartisan appeal. It probably won't make progress in 2020, but I would expect it to make progress in 2021. Mm-hmm. A lot of the industry is behind it. So if I was a CEO, I'd be building capabilities to, okay, what are the characteristics of carbon credit practices? Let's start getting those out there so that we can advise a grower on what to do in order to participate in the carbon credit market. Are there products, seed products, chemical products that could be developed that would have an advantage in a carbon credit world? Mm-hmm. Are there information systems, certification requirements that are going to be needed to participate in a carbon credit market world? So there's a whole set of dependencies, systems, products, opportunities that companies would need to be investing in today if this legislation progresses. Mm-hmm. And, yes, the legislation is good from a climate change or sustainability standpoint, but ultimately it provides the farmer also with a chance to capture greater value out of their production that's not just dependent on producing more volume. Right. And I think that is the way of the future. Value, not volume, but we've got to have a CEO that stands up and says, I'm going to build a system so that we can support the farmer if the farmer is going to compete in carbon credit markets, and we're going to create an opportunity for my company to deliver a set of products and services to do so. That would be a meaningful investment of resources into, like what I said earlier, that today are a set of good words and principles, but there's not a lot of meat behind them.
Well, we have a question here that came in from Kirk, and Kirk uses the word pain. His question is, when does the pain become too great for so-called big ag in quotes? They have to start making some moves. And I like the way that Kirk framed this, because he's talking about the pain and you're talking about leadership. For me, when the pain becomes too great, it's already too late, right? That's a reactive. This is no longer in our control. We're now being forced, whether it's policy, consumer outrage, and ag has seen this. We've responded to other big issues probably too late or not enough. And Paul, you're saying that leadership is what's important. Can we wait for the pain to be too great? Or does ag have to take a step forward before this? Is that what you're hoping for, that we do this proactively for once rather than reactively?
That would be my hope, because I think we're at a point. I mean, the point that the set of attributes that I just described about racial justice, gender equity, and so on, it's great that that's being said. That is suggesting that there is perhaps movement. Now, dollars need to follow those statements, but at least we've started. COVID is another potential instigator of change. Mm-hmm. Number one, it's demonstrated that food and ag is an essential industry. But number two, it also has said that, we've got some problems in in the system, in its resiliency that need to be fixed. So maybe that will be a push also. Clearly, consumer trends, all the consumer trends that we've already talked about, are also a push. So all these pushes together might get us to that point of leaders identifying this as something that needs to be done, mm-hmm. and they ought to do in order to go after a new opportunity that has future value, as compared to waiting until the pain is too great, and then therefore it might be too late. Now, financial markets are wonderful. Investments in some of the companies might begin to diminish if they're not responding to these changes that are occurring. Mm-hmm. If investments are not coming because they're not responding, then, like I said earlier, that 9% of sales that is being spent on research will drop to 7%. Mm-hmm. And then the pain continues until it's too late. That's not a pretty picture. I'd rather have it happen for all those other reasons I mentioned, rather than skinning the organization down only to meet the financial obligations.
Well, Paul, you talk a lot about leadership, and I know that you and I are also very passionate about not only today's leadership, but tomorrow's leadership. You do a lot with Drake University. I've benefited from your mentorship, and it's just something that I believe that every entrepreneur, when someone asks me what it takes to be successful or how did you get to this point, I always say I had a leader that was willing to take me under their wing, be generous with their experience and wisdom, and really allow me to stand on their shoulders. One of my concerns right now is if our industry doesn't change, as you said, if it doesn't start showing people what leadership looks like, what's going to attract that next generation to want to come into this? So if you're a young college graduate in Iowa, smart as hell, great personality, and let's just say that you're a data scientist, why would you want to work in agriculture when those skills could be transferable elsewhere? If someone asking me right now, is agriculture your passion? I would say that it is somewhat of a calling. It feels like a moral mission at this point to feed the world. I think we're doing great things. But when I look at the pace of our industry, when I look at these challenges, the bureaucracy at times, the fragmentation, all of that, gosh, sometimes I wish I worked in an industry where it was just a little bit faster, a little bit more cooperative, considering that we're trying to solve the greatest challenge in the world. Someone else that's that talented has their life ahead of them. Someone just said to me recently, it's too late for you. You can't get out of this. You're tired. But for someone that's just coming out of college, what would you say to them right now? Why should they do this other than the moral mission of this is the greatest good that we could do humanity?
Yeah. We've got a pretty good chance to get the data scientists that are going to universities in Iowa, Illinois, or Indiana, or Minnesota to get into ag. We need them out of Washington and California and Massachusetts and Florida. That's where we need to get them. Okay. But there are things in our favor. I mean, the colleges of agriculture went through the doldrums in the 80s and 90s, and now enrollment levels are back up to historical highs. So that's good, across the nation, across all, colleges of ag, enrollment is up. So the pool is there. I would argue, and I think the industry is arguing, that the disciplines that exist in Silicon Valley, in Boston, or even in Austin, Texas, the disciplines that are required there, data scientists, environmental scientists, biology, all of those disciplines are needed in agriculture and food. And I would say that the room left to exploit those disciplines in ag and food is greater than the room left in the financial industry or the insurance industry or the banking industry or the pharma or the medical community or the entertainment or the IT. I mean, there's no shortage of talent and venture capital dollars going into those segments. Now, there's a lot of room for growth, but my argument is the proportion of space left in those industries is less than what it is in food and ag. So there's more room for those disciplines to come into ag, and all those disciplines are needed. Mm-hmm. I would even argue that perhaps there's room in the state of Minnesota, the state of Illinois, for the people to come as well, mm-hmm. as compared to some of the other issues, whether it's San Diego or Silicon Valley or Austin, of lifestyles there, whether it's commuting time or mm-hmm. cost of living or housing cost or education constraints. There's attributes to join ag and food and have a different, you might say, lifestyle. So there's a lot of things to be said, but ultimately, I think the biggest thing is, whether it's millennial or Generation Z, those young people want to use their skills mm-hmm. in a job that recognizes those skills. But they also want that job to have a higher purpose, a greater good. Mm-hmm. And, my life experience and my opinion is that greater good can clearly be served in ag and food in solving these global challenges that we have, whether it be food security, nutrition, sustainability, that type of satisfaction in using your skills and interests to solve that greater good. I think the ag and food industry can do that better than about any other industry I can think of.
Okay. Well, I realize this has been such a great discussion. It'd probably go on for another hour, but I realize we are coming close to the end of our hour. But I'm going to pose a question to you. I did this with Mary last week. I said, if she could be queen for a week, what would she change? In the scenario, and I know that this might be one of your worst nightmares, if the industry calls you back and says, Paul, we would like you to be CEO of a large company again, what would it take for you to come back? What would you say the only way I would do it is if I was allowed to do these things unconditionally, because I believe this is what it takes our industry to become better? What would those things be? Are they things that you feel like now is the time that it's conducive to doing it? Is it something from your career that you couldn't get done, but now you feel like you could? Is it something that you've seen now, being on the outside, having worked with startups, that gave you a different perspective? But what would be some of the top things that you would do, and what are the conditions that you would have to do it under in order for you to give up that great golf game?
Yeah. The world has tremendous challenges to continue to produce enough food and the quality of food required. So yes, productivity is needed. But if I came back as a leader, I would shift the balance from productivity or volume to value. Mm-hmm. We've got to get out of producing surplus. Mm-hmm. Anybody can look at a graph, and I looked at graphs endlessly in my career. You look at a farmer, and the dollar that they spend and the return that they get. They've got seed, fertilizer, herbicide, insecticide, labor, capital, land, fuel. And I'm forgetting probably something. Yep. You add all that up together, and that's about 100% of revenue.
Yeah.
All those costs, basically, revenue barely, if at all, covers all those costs.
Yeah.
So to think that we're going to solve the grower's problem by just producing more, that doesn't get me there. We've got to increase the value. So that would be my primary requirement, is shifting the balance from volume to value.
Mm-hmm.
I just talked about one a moment ago. Let's invest in carbon credit markets so that we can prepare for the future when that legislation is there. So there's an example of what I would do to demonstrate that value component. Or ZeaKal. I would put in a significant investment to take advantage of the higher protein content that comes from photoseed so that feeders can be more profitable, and build a system so that the value of the inventor, the farmer, the processor, and the feeder are all satisfied. So that'd be one.
I'll put that on my to-do list, by the way.
The second would be, and then I'd get a consortium together of other players in the Midwest and invest in hubs where we would locate startup organizations throughout the Midwest to simply serve the needs of the food and ag industry. That it accomplished two things. One is it would open up that innovation funnel so that it would be more accessible to food and ag. And number two, it would bring those young people, those innovators, closer to where the action is.
Perfect. Well, we are a little bit over time, but Paul, this was absolutely marvelous. And for our audience, I hope that today's session and what we've done for the past 3 weeks has been a great conversation starter. In no way did we think that the series that we put on was going to solve all the questions or all the challenges that we face. But what we really wanted to happen was that this series would allow us to step outside of our respective roles, outside of our positions, our companies, to discuss the wider issues. And we all have a duty, I would say, to make, as Paul said, our industry better, because we have the greatest responsibility in the world, which is to feed the world. And I really appreciate all the follow-up that we've been getting as a result of this series and the conversations that are now taking place outside of it, which is really what we wanted to happen. And we hope you'll continue to reach out and we can continue these dialogues. So, Paul, thank you so much for today.
Enjoyed it.
I learn something new every time as well, and I have the benefit of you as a mentor and advisor, but I'm hoping that everyone else, sees a little bit of some of the things that we're passionate about and that we're discussing. And just as a closing remark, this series would not have happened without a lot of really great people that really pushed us to make this a reality for everyone that's viewing. Really want to thank my producers, Jennifer, Al, Ingrid. You all put together this content. You made the great interface, the marketing. We just showed up and kind of could just talk and share our thoughts, but you guys did all the hard work behind the scenes. So really appreciate the team. And a lot of volunteers that brought this together. Really hope everyone enjoyed it. We might do more of these in the future, so we would love to hear your feedback beyond the series. Are there other issues that we need to address? Are there other issues that you would like to hear about? And the guests that we can bring together, because this is really about, as Paul said, a very small community where we should all get to know each other and we should all try to solve these problems together. And hopefully this will become one of those catalysts or forums to do so. So I hope you enjoyed it. If you missed any of these sessions, they are on the ZeaKal website, also on our YouTube channel. Thank you everyone for the great comments. Thank you everyone that logged in and viewed it afterwards. And we hope to see you again in the near future. Thank you.
Thanks, Han. Have a good day. See you.